All right, analysis on the stock market with our projections. Important information first. Please do read this slide. Just take a moment to do so because this is the important information about how our analysis works and how you engage with it. So important information right here. Stock market analysis. Well, we're going to look at the S&P 500, but I'm going to start out first by looking at the European stocks, and then we'll look at the Dow Jones Industrials, transports, and the S&P 500. The reason I've set it up this way is because it was just a couple of months ago that we talked about the European stocks and the Dow Jones Industrials, that they were going to be bottoming on a cycle that was out of phase with the S&P 500. And that happened just a couple of weeks ago. And they are now set up to continue to drive the indexes higher. We think that a lot of the source of buying is going to come out of the NASDAQ as a lot of cash had gone into there, and we see that the institutions are very heavily weighted, are going to need to reset that as they sell off those 7 stocks that have driven the indexes up, and then likely because they're going to believe the bull market will continue, and so do we, that these other indexes are going to be driving it. I want you to see that analysis and learn from it. And of course, the stock market the S&P 500 got well past what we thought was the important resistance area. I referenced that early in the show if you're only watching the stock market clip, and it moved well beyond where we thought it would go, and that brings upside projections and upgrades for us. And upgrades always include upgrades to where the corrective levels are. So you're going to see that in here where higher projections are in the S&P 500 because the market certainly was much stronger than what we expected it would be. And our MCM, Market Condition Monitor, which if you do take any of our specials I offered earlier in the show, you'll be able to see that and get those indications on the market. Let's take a look here as we switch over now and look in the charts. This is FEZ, and this is just unbelievable, amazing cyclicality that we have in here. Really important for you to understand. What these dotted lines are where the actual lows are in the cycles, as you can see. And you can see where that hits relative to what are the ideal cycles on the bottom, right over there. And there's a dominant cycle right over here and a minor cycle. There are 3 minor cycles here that make up the whole harmonic family, as you see each of those. And you can see the absolute crazy, great cycle patterns in here. And when a cycle is positive, it's very likely that the next cycle would be positive and it will make higher highs. And you can see in here what it did was make a double top. And once it broke under this low, it set up this decline. And then you can see the failures and resistance for each of those minor cycles. I'm going to zoom in here and let you see the minor cycles, and you can get a good sense for what I'm talking about. These are the 3 minor cycles right over here in the dominant. Look at these perfect minor cycles as they rally, hit resistances, and then come down again. The breakdown over here, and it comes down over here into the fib target zone, right towards the 100% fib extension. You can see that right there. Then what happened was that once it moves above the 78.6%, it warns us of an important bottom being made. And you can see that. Now again, 3 minor cycles, 1, 2, and 3, each of them. Higher bottoms and higher highs, just absolutely beautiful. What that means is that the cycle patterns in here can be projected to the upside, as you see right there. And for the FEZ, we are projecting an advance, just as we are for the rest of the markets out here into late summer or early fall, and either hitting these resistances here or these up over here. And so this says that if we're only 1-2 weeks into this whole harmonic family right there, what's the probability that this is going to turn lower? I mean, it's near 0. And what that says is that European markets are likely to go up for some significant period of time. And that is going to be a source for strength for the U.S. market also, which we are also projecting and have been for it to continue up into late summer to early fall. Let's just take a moment and look a little bit here at the back over here at the cycles. And again, so you can understand how these cycles have laid out right there. And you can see that the beautiful cyclicality and the very, very positive early advance right over here. And if you want to learn more about this, go to our cycle analysis workshop, askSlim.com workshops. There's a free video in there and tells you everything about what's in that workshop. So you can learn a lot about cycle analysis right there. As we share just some very basics of cycle analysis, and that workshop has got 24 modules. Took me 2 years to write and over 6 months to produce. It's just an amazing workshop. Nothing like it in the world. So if you want to learn this and learn the importance of all of the messaging and applying our a very individualistic type analysis to the markets, then you can start learning right there. So that's a look at FEZ. Now I'm going to go through these other ones a little quicker because I don't need to do so much teaching during that. This is what we're looking at as the Dow Jones Industrial Average. Crazy, you know, I mean, we were really looking at this cycle right over here, which is a 33 bar cycle for the FEZ, for the Dow, and look where it bottomed here and is moving up. The Dow only 2 weeks into this advance. You could see it's really very much the same thing that we just looked at in the FEZ. And we said in the beginning of the year, we thought that the Dow would be the one index that would make a new high for this bull market, and the other ones would lag. Well, everything has changed right now when you look at the tech stocks and how they have strengthened, and AI being the support for that. So now it doesn't show that the Dow is stronger any longer like it did in the beginning of the year, though it may regain strength. And I still think that with the rotation very likely coming into these later summer months, that the Dow will outperform the NASDAQ, and that could get it up to here to the all-time high. But right now we're projecting it to this dominant cycle peak and the 78.6%. That takes it 35,250 up to about 35,550 up there. So, you know, a good 1,000+ point gains on the Dow, we believe, out into the summer. That's a look at the Dow Jones Industrials. Now, we showed the Dow Jones Transports just about a few weeks ago and said it was forming this important base right over there. And this yellow zones are the corrective zones, and the green right over there is the start of the advances in those cycles, as you see here and here. And this is just the start of this advance. You see this big inverted head and shoulders. That could get much higher prices in here. Right now, we are projecting it only up to the 78.6%, which is around 16,875. Again, early in this advancing phase right over here. Again, we think that, you know, there's going to be a move into, you know, old economy stocks and commodity stocks and those type of things, cyclical stocks like the transportations are. And that would, again, be money coming out of the NASDAQ, but it doesn't mean that the NASDAQ is going to go down significantly. It just means that it will underperform. We think that rotation is coming, and you can see it beginning right in here. This is a very powerful pattern that we see in here, and were it to be able to get out above the neckline right in here, or the resistance line that you see coming right across there, that would be a good sign that it's going to just surge on the upside here. So transportation average looking absolutely great also, and that is another, you know, important sign that the stock market has plenty of time to go here on the upside. And of course, our market condition monitor is showing all of these things as being very strong. Now let's look at the S&P 500, SPX. And here is the SPX. Now, What we had looked at in the SPX, which is being driven up by these tech stocks, was that there was important resistance that was in the area of 4,300, like right over here, to 4,360, which was the bottom, this 78.6% fib extension. Of course, it went through there easily and has much more strength than we gave it credit for. And now getting up even past this minor 38.2% fib extension right there. So no matter what we put in here as important levels, it seems to not really matter because this upside momentum is so strong. I haven't referred to this in these other cycles, in these other charts, but you could see in here our momentum indicator, which is the reversal scout on the weekly chart, which is showing all of the strength that turned up right over here and then continued on the upside. And you could see here where it turns down is where you get into these periods of correction, these yellow zones right over here, here, and here. And that is due to come out sometime over here, sometime between August and October is where we think that declining phase will set in. Now, the peak could be in August, it could be in September. The later it is, the steeper the decline that it usually is. And right now, the projections have changed as we have upgraded in here. So let's just take a closer look right here. And you can see that what we're looking at now is that forget about our old resistances because that's been disproven. And now what we're really pointing at is the likelihood of getting up in here. This is about 45.15 to that very major resistance at about 45.35. It's pretty likely that those levels will be made sometime out into that August-September period. Now, people will be looking at it and saying, well, we're almost already there already. Well, that's true. But at some point, it will stall and we'll get into this corrective period right in here. This cycle right in here is uncorrected. The later it stays up, the briefer the time is for the corrective period. You can see right in here on this minor cycle that what happened was it stayed up pretty late and only fell for 2 weeks there. And that's kind of what we think is going to happen right in here, a pullback. Right now, it points to that 23.6% at 4,300. Those supports are rising as the price rise in here. So we very mechanically change these. And for those people that prefer that I just say I'm wrong and that this doesn't work, well, we have proven that this is the best style of analysis there is year after year after year. So for those people that don't understand this, I really encourage you to go look at our workshop page and get some good sense of this style of analysis. The longer it holds up in here, it means that the timing translation is setting it up on the right side. The further on the right side of this cycle it is, the briefer the period for the decline. 4,300 is what we're looking for now as that gets upgraded, and then this move into the summer over 4,500. If it gets over this 45.35 number right over there, then the next numbers are way up at the all-time high, which I don't have in there. And I would say, based on the valuation situation, that is extremely unlikely. The Fed is not going to support these prices at 160% of GDP. The valuations are, as I said in the beginning of the show, at nosebleed levels, and that's going to begin to matter. So while traders, have to be very conscious of this upside momentum and not stand in the way of these moves, investors have to start looking at where the true valuations are and where these resistances are, and at what point they want to not add to positions and be considering actually lightening up on their risk. Again, we don't see any big downside potential until we get out here into the late summer and into fall, and the market should continue moving on the upside. Please do take advantage of the specials that we have out there, and especially to get the market condition monitor because that will give you very, very good insight on the conditions of the markets for 4 different trading styles on more than 100 stocks and these indexes that we look at, plus commodity ETFs. So it's just absolutely great. You want to learn more about that, you can go to our website, go to the middle of the page. You can sign up for our final 3 days of the premium services preview. You get everything that is on here. Plus, look at the show earlier in the show and you'll see the specials that we have for level 2 and level 3, where you buy 2 months and you get 1 month for free. And then it is a month-to-month subscription, and you can cancel that at any time. So go to the top of the askSlim.com page and click the Learn More button, and you'll see everything that's included in there, and you'll be able to become an askSlim member and join our huge community and get the support from our great analysts for all of the markets using cycle analysis and our proprietary indicators.